Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency market continues its remarkable ascent, with total capitalization now exceeding $4 trillion for the first time in history. This milestone reflects a convergence of regulatory clarity, institutional adoption, and technological innovation. Ethereum has emerged as a standout performer, surging 25% over the past week to reach $3,789, a 7-month high. This rally appears driven by significant institutional accumulation, with over 317,000 ETH, worth approximately $1.18 billion, withdrawn from exchanges. Such movements signal growing confidence in Ethereum's infrastructure role, particularly in decentralized finance and stablecoin utility. Should this momentum continue, analysts speculate that Ether could challenge the $4,000 psychological threshold, potentially triggering broader altcoin rallies as capital rotates from blue-chip assets to emerging ecosystems. Regulatory developments are reshaping the landscape, most notably the Genius Act, signed into U.S. law. This legislation establishes a federal framework for stablecoins, mandating one-to-one reserves, monthly audits, and dual state-federal oversight. The act represents a monumental shift toward legitimizing stablecoins for institutional use, reducing bank-run risks for smaller issuers while imposing stricter anti-money laundering controls. Market observers anticipate this could accelerate banking partnerships and drive further capital inflows into crypto-native projects. Meanwhile, the Clarity Act and Anti-CBDC Surveillance State Act, pending Senate approval, aim to define jurisdictional boundaries between the SEC and CFTC, while prohibiting the Federal Reserve from developing a central bank digital currency. These measures position the U.S. as a potential regulatory blueprint for Western nations, though European regulators appear more cautious. With the EU's AMLA labeling crypto a primary money laundering threat, and France proposing green taxes on energy-intensive blockchain operations, institutional participation is reaching unprecedented levels, as evidenced by a record $4.39 billion flowing into cryptocurrency investment products last week. Ethereum-focused offerings dominated with $2.12 billion in inflows, nearly double the previous record, extending a 13-week accumulation streak. U.S. markets drove 99% of this activity, while Bitcoin products attracted $2.2 billion. Altcoins also benefited. Solana saw $39.1 million inflows, XRP $36.1 million, and niche projects like Sui and Chainlink recorded smaller but notable entries. This surge coincides with traditional finance giants embracing crypto integration, exemplified by Jack Dorsey's Block Inc. joining the S&P 500 index, a validation of Bitcoin-centric business models following its systematic treasury allocation strategy. Such developments could pressure legacy institutions to accelerate blockchain adoption or risk obsolescence. Presale markets are exhibiting speculative fervor despite macroeconomic uncertainties. Token 6900, T6900, a satirical Ethereum-based project with no roadmap or utility, raised over $915,000 in under a month by offering 66% staking rewards. This underscores a broader trend where meme-driven narratives attract capital, disillusioned with roadmap theater. Simultaneously, projects like Bitcoin Hyper aim to enhance Bitcoin's functionality, a proposition gaining traction as Michael Saylor's cryptic orange dot social media post hints at imminent accumulation by his firm's strategy. Historically, such signals preceded BTC rallies, and with Bitcoin holding near $118,500, traders anticipate breakout potential that could cascade into presale frenzies. However, these dynamics highlight persistent market volatility. Over half of Bitcoin futures traders remain short, despite corporations like Metaplanet and Sequans aggressively accumulating BTC, a divergence reflecting conflicting institutional sentiment. Technological innovations are advancing on multiple fronts. Conflux Network, a Chinese Layer 1 blockchain, announced plans to launch an offshore yuan-pegged stablecoin with partners AnchorX and Eastcom Peace Technology. Targeting Belt and Road Initiative countries, this move could expand yuan's global influence while testing decentralized alternatives to state-backed digital currencies. Conflux 3.0, scheduled for August release, promises 15,000 TPS throughput for cross-border settlements. Meanwhile, Cardano founder Charles Hoskinson prepares to release a mid-August audit addressing allegations of ADA mismanagement accompanied by live-streamed transparency measures. His parallel efforts to integrate Circle and Tether stablecoins could bolster DeFi utility, though Hoskinson cautions that ecosystem growth requires deeper infrastructure beyond token listings. Security concerns loom large as Naris Protocol CEO David Carvalho warned that quantum computing could rip to shreds blockchain cryptography within 3 to 5 years. Dubbed Q-Day, this scenario threatens elliptic curve signatures securing Bitcoin and EVM chains. Carvalho estimates 30% of BTC, 6 to 7 million coins, held in non-hierarchical deterministic wallets, could be immediately compromised. Such risks may accelerate post-quantum cryptography adoption and pressure projects to implement quantum-resistant upgrades preemptively. Geopolitical shifts are influencing market dynamics. Japan's Liberal Democratic Party suffered historic electoral losses, intensifying pressure for crypto tax reforms. Current rates, up to 55%, have suppressed retail participation, despite Japan ranking 5th globally in crypto trading volume. A Japan Blockchain Association survey revealed 84% of crypto holders would increase allocations if rates were cut to 20%, suggesting reform could unlock portions of Japan's $20 trillion household savings. Similarly, London Stock Exchange Group is exploring 24-hour trading, a direct response to crypto's non-stop markets, though liquidity concentration during traditional hours remains a hurdle. Token unlock events are creating strategic entry opportunities despite volatility. Projects like Avail, Venom, and Blast unlocked over $27 million in tokens last week, with price reactions ranging from Avail's 3% dip to Blast's 22% surge. Analysts recommend monitoring such events via tools like token unlocks to anticipate supply shocks. Market structure developments are notable. Chainlink, $Link, rallied 60% monthly as whales accumulated over 8 million tokens, coinciding with rising Oracle demand from real-world asset projects. Simultaneously, Solana surpassed Intel's market capitalization at $101.9 billion, a symbolic milestone highlighting crypto's encroachment on traditional tech dominance. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.